Market Michael here. Okay, that was unprecedented, but let's just get forward to the news. We have a bond sell-off that is incredible. Like my little bear there, he's my friend. He's waving hello, or he's grabbing your money, mate. Grabbing your money. Give me your money, mate. It is April 19th. Oh, tomorrow looks like a lovely day, 420. Merry Christmas, everybody. Now, let's get into this bond sell-off that's been going on and why it's important. Well, who is selling the bonds? I don't know, guys. I've tried to find out, and I can't. No one is getting any information, and I can't seem to find any news on this. I think Gregory Manarino hasn't posted a video because he's probably going to end up covering this bond market. What is going on, guys? We have a 1.5% gain on the 10-year. Currently, we're at 29.12 with the yields. So, as you sell bonds, the yields increase. Okay, now I want to go ahead and talk about the economic data and then link it in to this bond sell-off here. So, okay, what did we get so far, guys? Let's check this out. Leading indicators for March is a big miss of 0.1%, but a big decline, even bigger decline from this prior 0.7. So check out that, guys. No matter how you spin it, this economic data is coming out mostly bad and not good. Now, this nat gas inventories, we're also getting a increase or a decrease rather in the inventories, which increases the price. All this inflation going on, all this price going on, it's a lot to think about. So, okay. Now let's talk about the bond yield. Now, or actually, this is the Atlanta Fed, and this is the business conditions index. So, we've been having higher lows. So we've having this uptrend, but look at here. We spiked out in the end of 2017, and now we are coming back down. We have set higher lows, but let's see where this goes. I think we're ending up we're going to end up reversing and hitting a negative trend going under this 0 point. This 0 point means average conditions. So we are just slightly above average conditions heading into the not average. Now look, you can say that we had no growth. We were not above average. We were not high above average after the '08 crisis. So, ask yourself really, these people say, the politicians, the economists, the Confederacy of Dunces, the fake news, what have they been saying? They've been preaching that the recovery was strong. Look at this chart. Does this chart tell you that we're strong? We are mostly below average for the time period from '08 till now. 10 years of below average of sluggish economic growth, and we're turning where the yield curves are inverting, friends, and this is the death by the Federal Reserve and central banks. So check it out here. Look at this. This is a 10-year Treasury minus the 2-year Treasury. And this is what people are looking at, and this is the yield curve that is inverting. We are also inverting on the 10-year to 30-year, but this 10-year to 2-year gives us more of a here and now versus a longer-term picture. With that being said, let's go ahead and check out this yield curve. Now, check out here. We can see at all the recessions here. Look at this. All these pink lines are a recession. So this is the 08, 07, 08 crisis. Now check out here. Look, we've gone down. We're pretty much at that level. We're about to go negative on this yield curve. You understand me, guys? We are in a recession. This market is going down. This is not some sort of hoopty-doopty, bullshit. The Fed is lying. They're lying through their teeth when they say that it doesn't matter that the yield curve's going to invert just because we can write a paper on it and we disprove it, because of reasons that, it's like when a politician dodges questions. They get up before Congress and they dodge the fucking question. They're dodging the point. The point is that the yields are inverting, and there's nothing to say about it except for the fact that we're about to enter a recession along with all these other economic factors. Now, check here, guys. The reason why we're going into a recession, if we're already in one, really, is because of the normalization. You know what that means? That means rising interest rates. You know what that means? The bubble is pricked. We have this interview. I talked about this earlier today, and I wanted to make a video about it yesterday. But the Goldman Sachs CEO, who's stepping down, Lloyd Blankfein, was saying that we are in a new time where when we when all right, we're in a new period where we have cheap money. Everyone's getting this cheap money. Everyone's pumped up, and nothing's real anymore. Everything is so propped up, artificial, and fake. And that, when we even think about tightening the balance sheet or think about doing it, even though the Fed's buying bonds at the back door, even though the Fed's, still buying, it's absolutely ridiculous. Even though that's happening, you know, check this out. This is the 30 yield and this is the Nasdaq. If this chart doesn't show you the pressures that are bringing this market down here, look at here. Look, whoa, 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 that's pretty sketchy. Whoop, whoa, whoa, whoa. Whoop, we're going up. We're going up. Boom. Going up. Going up. Boom. Markets can't handle the pressure. There's a pinhole in the market. Trust me when I say this, guys. Okay, this is the same chart, so. Alrighty. Now, let's get into stocks. Let's check this out. Now, I like I said, we were going to bounce, but I figured that we would not successfully bounce. This is going to be a continued downward day here. Even though this 30 minutes says, we're almost underbought, we're going to continue to drop, guys. We're going to continue to bounce along the bottom here. So be prepared for a rough time. I think we're just going to drop this support and say hasta la vista, baby. I mean, look here. We're trying to get the support. Once we drop it, guys, it's going to be bad. Now, there is a possibility we could recoup at the bottom, right, and come back up, which is a possibility. We can get a double dandy. But at this point, guys, take a look at longer-term charts. It's not looking pretty. Ready, guys? Come here. Oh, this is hour. We just looked at an hour. Let us look at a 4-hour, please. Baby, please. Thank you. Check this out. We are just coming down. And again, look at this bell shape. Doesn't that look absolutely familiar? Yes, it does. Check it out, guys. Look at this. Look at this humongous pressure on the upswing. And look at here. We get a bad day. Now, I called this out 5 days ago. Ready? 1, 2, 3, 4, 5. I called this out down here. Do you know what that means, guys? I saw that we were breaking out higher highs, right? I saw we were breaking out. We were going to break out, and that it's going to continue this bull move up. But guess what? You can't shit roses forever. We're coming down, and this is just part of the game. I'm pretty sure that this is it and we're not going to go up anymore. If we do come down, we could do something else, start a new pattern, but I think this is going to just trend down. This is more towards the downside, and that's what I'm seeing. Now, the Dow is particularly hanging in very strong. I wonder why that is. Maybe we got some earnings release or something, but, it should be coming down soon. And these markets just, look at on a daily. We're losing steam. We're losing steam. So this is a longer term battle that has to be has to be fought over today. And on top of all this, market mayhem, we've got the bond market selling off. We got the dollar trying to raise for some reason, the dollar trying to bounce. But I don't see the dollar going anywhere. We did make higher lows than the pre-market. So that what that's telling me is that there is some bull strength here, but we're gonna have to see whether we make higher highs or lower lows with that. But guys, I just want to show you this 10-year yield because it's just spiking out, giving me some troubles. And now there's some big talk about this whole silver ordeal. No matter what, we are nearing the top. All the indicators are topped off. I wouldn't really consider this a short squeeze. This is just momentum in the price ranges. We're not a squeeze would be something extraordinary. This is silver has had these good runs. I'll just pull up silver right here. And look at this. The bond market is just going nuts. So check this out, guys. This squeeze is not really something out of the ordinary. This is, look at here. We've had ups, we've had downs, but no matter what, we're in this price range, and this range is getting smaller and smaller. So check this out. Let's just go ahead, make a channel for you guys. You know what? This is more of a pennant. But that means that all this means is that it's going to break down even less. I'll just put up another kind of equilibrium because it is kind of going on an uptrend. So check this out, guys. It could very well just stay in this trend line. Let's look at it on a longer time frame. We 29.19. Wow, this is incredible. Let's check out this bond market on a 20-year monthly chart. So, I mean, not bond yield. Let's check out this silver market. Again, silver is uptrending, guys. Silver is uptrending very slowly. Well, it's actually descending, but we're staying in this channel. That's what we're doing. Now, I said it's uptrending. It's pulling up. It's like you're pulling the plane up. And that's what the market's trying to do, but it's staying in a channel. So there's nothing out of the ordinary. I don't think silver's going to break out here. I think we kind of just stay in these ranges. And if we do break out, that's going to be the squeeze. That would be a squeeze, If we start to come down, all the shorts are working, but then boom, silver whoop goes right back up because the buyers are just buying, 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 and they're going to short squeeze the hell out of the shorts. With that being said, the dollar is breaking out here, so we looks like we are going to get those higher highs. Very interesting. The dollar going up, bond yields going up. There has to be a major seller of bonds and the stock market going down. Very interesting. Well, we covered all this stuff. Nat gas's inventory, the price is gonna go up on nat gas. The price is going up on oil. What do we see here? We see generally the stocks taking a breather. We're gonna have a decline, and even if the stocks don't want it, these stocks don't want to come down. These stocks want to stay high. So we are just gonna keep watching and waiting to see what goes on. It looks like we are just going to persist and just crawl across the bottom here as stocks break their lows and get lower lows. Let's check this out on a 1 minute for the comp. Yeah, we absolutely broke this flag here. So, I mean, it is not looking good. We are hitting lower lows. This looks kind of positive, but, I saw we failed this twice, and I knew that we were game over. So, hopefully you guys like and subscribe. Keep watch the bond market today, because this is insane that we got a gap up and a spike on the 10-year yield. That means the amount of selling that's going on is unprecedented. Who's doing the selling? We'll find out in later videos. Is it China? Is it Japan? Is it Russia? Is it grandma at the Fed? I don't know. Grandma's still sneaking around, doing some grandma type stuff, making cookies. She's making cookies for Powell. Come on, leave her alone. All right, thank you very much, guys. Please like and subscribe. I hope you enjoy this content, and stay safe. I try to make this as enjoyable as possible. I'd rather watch this than watch some fake news and get lied to. That's why I enjoy the alternative media. That's why I enjoy listening to Peter Schiff, Gregory Mannarino, etc. Because I want to hear the real news. And, Peter Schiff's hilarious. He's got these one-line zingers that I love. He's just like his father. And, he embraces libertarian ideas. I love to hear that. I love to listen to Ron Paul. I love to hear those strong, good ideas. So, well, thank you very much, guys. Let's just expect this downtrend to continue. The pace isn't insane. We're having a pretty slow pace here, but as these yields increase, and as we start to drop below this trend line, we could start to pick up, or who the heck knows, these algos could go crazy. It looks like everything is just holding on for dear life at the moment. So we'll leave it at that. Thank you very much, and I'll see you later, probably around 12, 1 o'clock or so. Thank you very much. See you later.